Hey, it's Tim Kerley from Atlantic Bay Mortgage Group in Hickory with your monthly Mortgage Minute. Do you know someone who is contemplating buying a home, maybe as a first-time home buyer? Maybe you're thinking about buying a home and you're trying to figure out whether this is the right financial decision for you. Maybe you're renting now and there's some good reasons to rent, but you're trying to figure out, again, whether home ownership is right for you. Well, I put together a little presentation here just with some numbers. This is purely from a financial standpoint to show you what the implications would be of renting versus owning over short and long-term periods of time. We're going to look at both 5 years and 10 years. So I want to share my screen with you, and you can see we've got a summary table here with a few columns. On the left side of your, the far left column shows rent. So let's assume that you're paying $1,200 in rent right now. If you're renting, are you paying some rental insurance? You probably are. I have not included that in this analysis. Also, if you're renting, do your rent payments go up on a year-over-year basis? They probably do. I mean, do you know anybody whose rent hasn't gone up in 10 years? Probably not. But for the purposes of this analysis, let's just say that your rent payments stay static and they stay the same, the $1,200, and they don't move around. So the first question is, how much of a house could you buy for $1,200 a month? And you can see I've got 4 different price points here from $180,000 all the way up to $225,000. The $180 and the $195 payments are going to keep you under the $1,200 mark. If you find you can pay a little bit more than $1,200, anticipating that your rent maybe is going to go up at some point in the future, then perhaps you could go above the $200,000 purchase price mark. Now, these are all conventional loans. They're all 30-year fixed rates, and these all have 3% down payment. Fannie Mae has there are a few different programs out there where you can do a 3% down payment. So you can see I have highlighted there, how much would the down payment be? And let's just look at the 180 purchase. $5,400 is your down payment that's your 3% down payment to be able to purchase the home. Okay. The next line that you see highlighted down here is your total payment. So you can see there, again, you're paying $1,200 in rent, not counting your rental insurance or any increases in rent. At $180,000 purchase, it's below the $1,200 mark, $1,104 and some change there. The next line down is the principal paid. Well, why don't we show the principal paid? So by the way, these payments that we're talking about here do include property tax and the homeowner's insurance as well. So when you make your payment, part of the money goes to interest, part of it goes to pay the taxes and the insurance. But in this case, on the $180,000 purchase, $280 a month is going toward the principal, and that increases over time. Why is this shown on here? Because your interest and the property taxes and the homeowner's insurance, those are all being paid to other people. The principal payment is really being paid to yourself because you're building equity in this asset that is your home. The next line down is the net monthly payment. So this is just showing you an analysis on the 180 purchase. Let's say the net amount that you're paying is the $823.73. Why is that? Because the $280.84 is being paid back to yourself in the form of equity in this asset. Same thing on the net monthly savings. This is just showing you the difference between the $1,200 and the $823, again, on the 180 purchase. And then the last line that I have highlighted down here is your cash to close, $11,142. Now, why is your cash to close $11,000 when your down payment's only $5,400? Now, you may know this, but when you buy a home, there's some things that you have to do in order to obtain the mortgage. You have to have an appraisal done. You have to get an attorney to do the title search. You have to have title insurance. You've got to have homeowner's insurance up front. So this $11,000 is including your 3% down payment plus the closing costs plus the prepaid items like the prorated property taxes and all those kinds of things that go into a home purchase. Now, the good thing about it is this example is showing you that you're paying everything out of your own pocket. In many cases, you may be able to get the seller to pay some or possibly all of your closing costs. So, if you can negotiate for the seller to pick up the tab on these closing costs, then that would leave you with just your down payment. But I've shown it here, worst case scenario, you're paying everything out of your own pocket. All right, let's go to the next slide. Again, this is your net monthly payments. Right now in rent, you're paying $1,200. If you subtract out the principal that you're paying with these other home purchase options, you can see your net payments are below the $1,200. Let's look at a short-term scenario, 60 months. That's 5 years. Okay, $1,200 a month. Over the next 5 years, you're going to pay $72,000 in rent. That's rent paid to somebody else. None of that money is building any equity at all for you. Look at your $180,000 purchase. Now, over the next 5 years, you will amortize your loan $18,327. You will have paid your loan down by that much. That's equity for you, and that's not counting any appreciation in the home's value. Let's look at the last slide here. What's this going to look like in 10 years? How much equity this says net worth in 10 years, but you can substitute the word equity. How much equity are you going to have in 10 years? Well, if you're renting at $1,200 a month, you're going to have no equity. Look at the $180,000 purchase. Over 10 years, you will have paid down the loan sum, so you're going to amortize it. You're building equity that way. Also, the home is going to appreciate some. Now, we're just estimating. I'm using a 3% appreciation rate. The forecasted appreciation for our market is over that for the next 5 years, but let's just say it's 3%, a moderate 3% rate. On the $180,000 home purchase, you're going to have $107,000 in equity, again, versus zero for rent. Again, I hope this is helpful information for you. It's something certainly to think about, how owning a home can build equity. And if there are scenarios that you would like to see, or you'd like for me to build an analysis for you, let me know. Please feel free to reach out with any questions you have, and I'll be glad to put that together for you. Okay, thanks for watching. Appreciate it, and we'll see you soon. Bye.